Friday. What's up, everybody? Friday morning. Welcome to today's edition, Daily Market Commentary. Glad you're able to join us on this beautiful Friday. We're wrapping up the week, and as we come to the end of the week, we are seeing a little bit of a market pullback from earlier in the week, but it doesn't mean that we're necessarily not going to close on the highs, because you never know what can happen with this market. So if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell for all the alerts and the updates. Make sure that you leave a like on the channel. Computers like it. I like it. You like it. We all like it. So just throw a like. Okay, let's go ahead and dive in. Starting with the big picture. So looking at the big picture, starting with the S&P. Now, I left a couple of lines on here because these are the areas that we had looked at from the other day. And this little area here, we had talked about this noisy cricket potential supply level on Wednesdays. If you remember Wednesday's daily market commentary, when I was looking at the market, was right about here in this blue box. We talked about this little noisy cricket area here. Well, that's certainly not going to be a valid level when you get basing in front of the level, and then, boom, we popped right through it. Now, what that did was it created a potential for a reversal off this big move up, and then that did not hold as we got, you got a little bounce off of it, but we came really close to it and moved away, and then got a little bounce off of it here and moved away. And so the very next time through, it just busted right through the level. So it just didn't give much hold or much support. It came away for about a 1-to-1, but just no real move there. And then that was the first indication. So your 15-minute level is the first one that broke. And then it came to this hourly level. And this hourly level that we have here, it was hit once with a really nice move away. The second time, notice 1, 2, 3, 4, 5, 6 candles later, it had gone nowhere. So said, hey, this level's not going to work. Should probably get out. And then we ran into this one yesterday, and this level here was from Wednesday's daily market commentary, where we came in, gave this a pretty nice touch and go out of the level. And if you took this one, you're still riding it. There's no reason to be out of that position as of yet. If you moved your stop to break even, great. You should probably have more than a 2-to-1 reward to risk wrapped up on this one. So hopefully that level did pay off for you. But I will say this, it hasn't really been able to provide a new high. And so since it's been unable to provide a new high, I don't think it's worth trading again. I know oftentimes on these kind of positions, we'll switch this to a confirmation entry. But in this case, I think it makes more sense just to remove that level altogether and really lean on this 4304 as our next high-quality demand area if price falls. Now, I'll also say this. If we base right here, then I think you could have another opportunity for a short. If we start basing right there at that level, you can get short on a breakdown below that zone. That would be, in my mind, the next level to look for. Looking at the ES, we can see that we've got some reversal candles here as we rallied up all night, but we are getting some reversal candles. Doesn't mean that it's going to reverse. Now, what about my shorts? Well, none of these supply levels up here are really any good, so there's nothing of any interest from a supply standpoint for me to look to get short. I think there's probably a good chance we stay between these levels today. So those of you that trade the one-day iron condors on the SPX, that may be an opportunity in here for a place to trade the one-day iron condor position in the SPX. Looking at the NASDAQ, so the NASDAQ, very similar picture. We did come to that supply area here that if you wanted to take it, had to be a confirmation. Price moved away from there and then blew right through these smaller time frame demands. And what happens is we start blowing through the smaller time frame levels first. Right now, we did wind up coming back all the way to this smaller time frame area of demand and have gotten a bounce off of that level. So that was the level that we had looked at heading into this morning. So now, once again, because it's not been able to create a new high, I've got to remove it. I don't want to try that again. And we traded more than 50% of the way into the level. So with that being said, I will say that unlike the S&P, the NASDAQ actually gives you an area here that's a really strong potential short. Now, what is so strong about this short? Well, look at this long wick here. This long wick means that we dropped all the way down to here. We rallied back up, and then we fell. So this is what I would consider a rally base drop right through here. Now, here's the rub. Well, what about this drop base drop? See, this is price dropping, basing, and dropping, and then rallying, and then dropping again. So the question you have to ask yourself is this level a high probability level in terms of a newly created and fresh level? The answer to that would be no, and it's because of the wick, right? It's because of the wick. If I go to a 15-minute chart, you'll be able to see it more clearly. Base, 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 drop. If all you saw was up to the green candle, you would say, okay, this is a little bit of a basing area with a strong drop. We get short on the retest. Oh, look, this green candle is the retest. And then we drop again, right? So that's a better way to think about that level, in that, yes, the level is there. The level exists, but it's not as high a quality zone as you might think when first looking at it, because that wick tells a story. Wicks tell stories, and let the story that the wicks tell you really, drive where price can go. So similarly to the S&P, I think if we get basing here, you've got a potential breakdown area. I will say that I think that we're getting a little, potential for a candle-to-candle short off of this level if you do want to go short. Remember, when we're this close to the all-time high, the only way you really should be going short is candle-to-candle or on a confirmation entry. And right now, it's looking like we may get a little sell-off based on just the pure price shape, although we are up this morning, and the markets are up a little bit this morning. I want to take a real quick look at my other two indices. Let's look at the Russell. Now, we've talked about the fact that if any market's going to come down, the Russell's the market to come down. And the Russell bounced off of this really nice area of demand earlier. We got a hit off of that level. And now we created a really nice area of supply up here, which it was unable to get to. So if you're looking to get short, the Russell is clearly the weakest of our markets. It's in a defined downtrend, a very clearly defined downtrend on our 4-hour time frame. Even on the daily chart, we're seeing that the Russell is unable to create a new high. We were looking and looking and looking, and we put a little alert up here to tell us, hey, this is a good potential short. Never made it back up to that alert. I want to remove that because I've got too many alerts on my calendars, or on my platform. And so when I'm looking at this, I think that if we do get up above here, you could have price breaking up through this region. But in reality, I think that a short makes a bit more sense in the Russell. I just don't necessarily see, you got a decent quality area of supply up here. Let me try to clean this up just a little bit. That up there would be, I think, your best supply zone. Oh, you know what? As I look at this is me thinking while I'm talking to you. I think this actually might be a bit better. And they're both pretty decent for potential areas. The reason I like this one is because we are at a prior area of resistance. So what I think it makes the most sense with this one is we make this one a confirmation, the upper one a limit, although and then that allows me to get in on the first level if we penetrate by 50%. But the second level, I think, is the limit entry. So now, breakout long above 2201, I don't know that there's enough supply up here to stop it from getting up to 2220 or so. All right, let's go back and take a look at crude oil. So crude oil, we had looked at this demand area down here. Price came into the level. We did get a little bounce off of the level. 1, 2, 3, 4, 5, 6 candles later, we had basically gone nowhere, telling you, okay, take some money off the table, as it's probably not going to do its thing. And then we see that we had a on our next level, we see that we had a little bit of this area of supply still going to be valid. If I look at this on our daily time period, I do see for the first time in a while that I've put in a confirmed lower high, right? So confirmed lower high on the daily chart for the first time in a while in crude oil. We hadn't had a lower high, oh hell, since down here. And then that didn't even really last all that long. So, a little bit surprised, frankly. I kind of anticipated oil being a little bit longer in the teeth to continue to run higher. Doesn't mean that this upward move is over, but we definitely are seeing that slowing of momentum. So in that case, for the first time in a while, you might be interested in looking at a couple of shorts. I think that's a really clean short area, drop, base, drop, formed right there at the U.S. morning session for a potential reversal if price indeed comes back in through that region. Looking at this on the hourly time frame, I just don't see a lot of great levels on the hourly chart as it stands right now. And then as far as our 4-hour chart, where's our next quality demand area on the 4-hour? See, this to me is looking more and more like a potential breakdown setup off the 4-hour chart. This area of demand here, I don't know is going to be strong enough to hold price. All right, let me get rid of some of these lines here. All right, clean up my charts. So let's go ahead now to gold. So looking last here at gold, we do see that we had a potential breakout, certainly no basing in front of that level to give us the breakout. So that unfortunately didn't get you a potential entry. We then had this area of demand right here, this little base rally right in here. Price has come into that level. Now we've come down below it with a little bit of a move up, but in reality, even if you took your stop at the wick of the leg-in candle, you didn't technically get stopped out as of yet. However, it's not really doing a whole heck of a lot. So I don't feel like this is going to really hold all that well. If you note, we got basing right here. So the basing that we got right here is less than your 2-to-1 reward to risk. Everybody sees that basing very clearly. This is a good picture because in this case, your stop at the tightest is going to be here, right? Below the wick of the leg-in candle. We got basing at basically a 1-to-1 reward to risk. So even if we do bounce out of here, it doesn't give me a quality setup. Basing before the level is the kiss of death. And so we don't really want to take a trade when there's basing before the level anyway. On a 4-hour chart, our trend is up, but we see that it's, we're giving a little bit of a roll, and our last couple of candlesticks are definitely a bit weaker. So if you wanted to be a little bit more aggressive, if we do rally up out of that area for that 1-to-1 reward to risk, that would be your short entry. Now, I am going to remove the 15-minute level below here because I don't know that that's going to be able to hold price, especially if, we're putting in newer lower lows. All right, well, those are our markets for today, our 4 major markets. But let's talk about our stock of the day because there's a stock that seems to always be in the news. That's right. We're talking meme stocks, the ones that everybody likes to talk about. Everybody likes to drive up. And so let's talk AMC. So AMC, we had the big, huge spike up to $72 earlier in the month of May. And that was a good, nice, strong spike. And the markets then said, hey, by the way, this is not going to last. And we saw the markets really start to pinch, pinch, pinch. And then we got a little bit of a break. And then it retested that area. And now it has fallen hard ever since. Right? So, question is, how far down does it go? Well, the price has been basically cut in half in the last few weeks. And I think that there could be a wave of buyers that step in somewhere down in this range. Obviously, there's a lot of potential for buyers. But I think that there could be a wave of buyers that steps in at some point again to drive it back up. Because here's what's going to happen. When you see stocks like this that have had this history of pop, 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 at some point there's a chance you're going to get another wave of buyers that steps in and drives the stock that much higher. Now, I will say this. If I pull up our implied volatility on this, our implied volatility relative to where it's been is actually not its highest. We are seeing over the last few days implied volatility starting to kick up a notch. And I've heard more about it in the news. So I wouldn't be surprised to see a little bit of a pop higher on AMC. I think that this is the best level down here at about 20. If it drops all the way down into there, I actually might I might consider throwing a really strong entry in there. Right now, this meme stock thing is not my thing. I don't really love to jump ahead of moving trains, but technically, that's actually a really good entry. If you really want to get a hold of this thing and ride it, you could look to just get long above 40, right? Where you have this bit of basing that could act as resistance, and if we pop above there, it potentially has a decent run. I think if you feel like, hey, this thing can go 50% in 3 days, and I'm willing to throw some money at it, here's what I would say about these meme stocks: be willing to lose everything you put into the position, right? And if that's the case, if you're willing to lose everything you put into the position and you understand the risks that you're facing, then great, feel free to go for it, right? But when you've had a stock that's gone from $1.91 to as high as 72, and now we're back down to 36, you got to be aware of that. Okay? The other one is GameStop, right? GameStop that everybody takes a look at. Now, GameStop, interestingly enough, has come back down to a decent little area where there's potential for demand. Unfortunately, we got basing here right before the level, right? Basing in front of the level. We've come into it 1, 2, 3, 4, 5, 6 candles later. It hadn't really stopped you out, but it's not really gone anywhere as of yet. And so GameStop is another one that the volatility is down just a bit. And GameStop, once again, another one that went from $13 to $483. It was really the big mover, right? Even more than AMC from a dollars and cents perspective. What's next for GameStop? Well, from the meme stock perspective, I can't really give a good fundamental or technical analysis approach on this particular one. I will say what's interesting is that the stock got clobbered, all the way down to $3 a share. Losing money, 1 quarter of making money, and then last quarter again losing money. So we'll see from a fundamental standpoint if that story continues. So just keep an eye on those ones. Those are kind of the ones that are in the news that people are watching for today. But if you have any questions, as always, send us an email, support@tradersarmy.com. Until tomorrow, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.